Hello and welcome Tiernorts to this daily market commentary for Thursday the 13th of June 2019. One more day left to the weekend. Hope everyone has had a good day. So what has Thursday done? Well, Wednesday, just a reminder, we saw some good moves in the crypto markets with a broad rally, with Bitcoin trading up as high as 8,300 at one point, and Ethereum also trading higher to around $260. The US dollar also rallied on the back of President Trump's tweet about potential sanctions on EU countries. Remember, we mentioned Germany, Austria, and France as being the potential victims with regards to the Nord Stream 2 gas pipeline project with Russia. Thursday would begin with a very different theme, which you can see on my screen here, as reported by the BBC. What crypto was happy to slowly consolidate on Wednesday's gains, the FX, equity, and commodity markets, which certainly turned their attentions to events in the Gulf of Oman, where two oil tankers were reportedly struck by torpedoes, causing significant damage to both, and for both to catch fire. All crew were rescued safely, but the markets were certainly concerned with the price of oil immediately spiking around about 4%. And as you can see here from the picture here on the BBC website, there was certainly some significant damage caused to the tanker being shown there. You would think that bad news would not be good for the equity markets, but prior to the US Open, the Dow Jones was showing, the futures were showing a gain of 100 points, and markets in Europe were generally higher. The reasoning really behind this is just it's considered that a higher oil price, certainly given where it's trading at the moment, is a good thing. But obviously, it's a pretty bad reason behind it. But regardless, the equity markets certainly showed some gains prior to the US Open. I guess bad news really can be good news. The FX markets began quietly. Dollar having a bit of a mixed day. We're pushing minor gains against euro and sterling. The greenback weakened against the Japanese yen, dropping back down to a low of around 108.20 at one point, once the equity markets were open, and some of those gains were given back. Gold gained another $7, trading up to around 1344, as traders continue to buy as a safe haven hedge, especially in light of events in the Gulf. By the end of the day, the US had blamed Iran directly for the attacks on the oil tankers, which of course was immediately denied by Iran. However, equity markets in the US showed their resilience, with the Dow Jones rallying back from almost flat back up to those 100 points higher, which they had showed before the market had even opened at the beginning of the day. The small cap dominated Russell index was a standout performer, closing up over 1%. Looking ahead, Friday in Asia brings Chinese industrial production numbers, and then we have US retail sales data later in the day at 8:30 a.m. New York time. Look for both to be potential market movers in both FX and equity markets. So for today's technical analysis, I wanted to take a look at dollar yen, which is what you have in front of you here. The dollar yen itself is the green and red, and over the top I have superimposed in orange, I have the S&P 500 index. The hourly chart shows the dollar struggling to make any meaningful gains over the past couple of months. As you can see, it's topped out around 112 and has since come down and tested support down here a couple of times, just below 108. As you can see, in June here, we've seen the S&P start to rally, but we've seen dollar yen really struggle. So we've got some real divergence on that correlation. Several attempts below 108 have failed, but rallies have also been limited as well. The low back in February at 107.77 is starting to look a little bit vulnerable. to another test with a break potentially opening up the downside to the January flash crash low. As you can see over here, this very sharp move we had here at 104.92. I think any sign of a pullback in US equities, if we start seeing the equity market coming down, I think could be quite dangerous to dollar yen, and will likely come under pressure, certainly with a test of this support line here. And then below there, you really have a vacuum because this move back in January was exceptionally quick. So definitely something to keep an eye on. And if anything starts to come out of the situation in the Gulf with Iran and any US reaction to that, there's every chance that dollar yen may come under some pressure. And with that, I'm going to bid you all a good day. Thank you for tuning in, and I look forward to speaking to you all tomorrow. Cheers.